Welcome back. Trading places, the largest generational transfer of wealth is coming as baby boomers move out of the workforce and millennials move in. The shakeup is estimated to cause a transfer of $30 trillion over the next 30 to 40 years. This is according to a new report by the Wells Fargo Investment Institute. And joining us right now to talk more about it is Wells Fargo Investment Institute Global Quantitative and Technical Strategist Samana. Samir, good to see you. Thanks so much for joining us.
Absolutely.
This is a big story. Baby boomers generally considered the wealth-holding generation. Walk us through what's taking place.
Sure. So what we'll see over the next decade or so is we'll see about a 4 to 5% transfer every year. And then after that 10 years, what we'll see is an increase, almost to 8 to 9%. So what you're seeing is the silent generation, which grew up during the Great Depression. They're passing on and their wealth to the baby boomers, who will then turn around and pass on to the millennials. And so that's what will drive a lot of preference, a lot of consumption, and a lot of investing trends.
Do you think this is going to change and impact the economy as baby boomers retire, millennials take on more exposure in the workplace?
It will.
What's the impact to the economy?
Sure. So what it'll do is it'll keep driving a lot of the trends that we've already seen, right? Technology will continue to be a much bigger portion of how we do things, whether it's purchasing things online, whether it's doing things from an investing standpoint, like robo is a big deal right now. Wells Fargo just rolled out their own solution because again, what millennials are telling us is they'd rather have less interaction and they'd have things more automated.
Right, and talk a little bit about the fact that a lot of millennials are saving cash more than they're necessarily investing. So as you see this gradual transfer, how is that going to affect markets? And are there any in particular, investments, even though they're more rare, are there any investments that you see that millennials are leaning towards more?
That's a great point. So younger generations, what we're finding out is they have a little bit more in equities, but not nearly are they taking as much risk as they should be, and they hold a lot more cash. And we think that has to do with, having lived through the great financial crisis now, and if you're a Gen Xer, right, you went through the twin crises of the tech bubble and then the tech wreck and then the great financial crisis. So they hold a lot more cash. So one of the things we might, see as that wealth transfer takes place is they may not buy stocks to the same extent that they should.
So, Samir, one of the concerns is you have all these baby boomers retiring with these financial assets, and that they take it out of the market because they want to live on it and they have to use it to pay medical expenses and such, so that you have a huge sucking sound basically coming out of the stock markets over the next decade, 2 decades. Is that a problem that could hold back stocks over the next 10 or 20 years?
We don't think so. We'd be much more concerned if the millennials weren't as big a portion of the overall population as they are, right? I mean, they are almost as large in number as the baby boomers are. So they'll really kind of pick up the baton where the baby boomers leave off. Now, it has major sector implications. Healthcare is a great, point. When we were running the report and you look at how much the baby boomers are spending on healthcare, that's going to be a major trend for years to come. So for everybody who worries about, things like drug pricing, you're kind of missing the secular trend.
Are you saying that the baby boomers are going to transfer their wealth to the millennials, or just that the millennials are going to be saving more and that the baby boomers are going to be saving less?
Both. Exactly. So as baby boomers get older and they pass on, their children tend to be more in that Gen X millennial cohort. And so eventually that wealth will transfer on. But at least for right now, baby boomers are just now entering retirement and, have probably a good, few decades ahead of them.
Well, I'm really glad that you mentioned Gen X. As a member of Gen X, I feel sandwiched between the boomers and the millennials, and certainly something that we're concerned about, that we are the smaller generation, the boom obviously being a boom, more people. You have the baby boom that's retiring and retiring for longer amounts of time. What does this mean to our federal financial health when you're looking at Social Security and Medicare and the tax burden on my generation?
I mean, it's going to be a much, bigger deal than it's ever been before, right? So you have the baby boomers who were one of the first to have to plan for their own retirements, right? So that they came up, kind of when 401ks, 403bs were kind of taking on much more popularity. So they don't have pensions to the same extent as the, the silent generation.
But we have Social Security and Medicare obligations to the baby boomers.
Exactly. So, those will be taxed much, at a much higher rate from the standpoint of, the baby boomers will look to those for their source of funds because they don't have pensions to the extent that their parents did.
Supporting, this pyramid scheme.
Exactly.
And millennials generally, all of my friend group, as well as I, read repeatedly, one of these reasons that millennials trend toward cash is they just don't expect Social Security to be there at all, just not planning on it at all.
No, that's a good point, actually. And they're also facing student debt, right? A Wells Fargo study found 55% of millennials feel financially well off, but 44% do not. How is the generation choosing to build wealth then?
So what we're noticing right now is they're taking this barbell approach, right? They have the cash, which is a good thing, right, from the standpoint of you need that emergency, fund on hand. But then they are creeping out into stocks a little bit. But what we really need them to do is have the difficult conversations with their parents, with their children about, what obligations they can satisfy. But then we really need them to take enough risk. Time is the one thing that none of us can get more of later on in life. And so if you're a millennial, if you're a Gen Xer, and you're, within kind of the allocations that we've seen, which is more in that 60 to 70%, you've got to, really increase the amount of risk that you're taking without thinking about, again, some of the obligations. You've got to be able to take some of that, risk and get that growth in your portfolio.
All right, we will leave it there. Samir, great stuff. Thanks so much.
Thank you.
Samana joining us there.